I'd like to introduce to you Jeff Hildebrand, and then I'll allow him to introduce his team.
Thank you, Zane. I appreciate that. Was everybody okay this morning driving in? Easy traffic. We're based in Los Angeles, California, but we're up here quite often now. And this will just be the first of many, a series of webinars and seminars that we're going to be doing. Because as Zane had mentioned, the SBA has been around for a long time, since 1954, but they've come up with new programs here as of January 1st. Now, this is the underwriting manual, and Zane, you're exactly right. Has anybody ever tried to get an SBA loan before, know much about the Small Business Administration? Yeah, yes and no, and maybe so, but 5 or 10, 20 years ago, it was a very difficult program, a lot of paperwork. This used to be, if you can imagine this, 1,000 pages thick. And then the underwriters at the bank had to have another 500 pages of SBA notices. And it wasn't even online. They had to go through it manually. So if you tried to get an SBA loan in the past 5 or 10 or 20 years, or even several years ago, it was a very difficult process because it was really an antiquated system. But what the government's done is they've added new programs over the last several years here. And they started changing these underwriting guidelines back in 2009, 2010. And if you know what's happened with the mortgage market, there used to be easy lending programs. Washington Mutual was available, Countrywide was in business, IndyMac, all these banks had stated income loans for small business owners and even big business owners. But as you know, Washington Mutual is gone. Countrywide's collapsed. So all that easy lending that was used from 2000 and until about 2007, even 2008, right towards that end of it, it's all gone really. It's difficult to get a home loan. If you're a small business owner, it's difficult to get financing because it's full documentation and banks don't want to take risks. So what the SBA does, what the Small Business Administration does, and that's what the SBA stands for, is they guarantee the loan for you. It's like having a co-signer. So we're going to go through some of these programs that are available as of January 1st. So like I said, if you've tried in the last 3 years or 5 or 10 years ago, keep an open mind because MBank really has a commitment to this community to help business owners one at a time, find a solution to their funding needs so you can grow, increase profit, and decrease expenses. And who's on board with that idea? Exactly. I mean, that's really the bottom line of any business. I was at a seminar once in California. There's something called Claremont College, and Peter Drucker, he's a famous economist, finance professor. So he's in front of this group, and he's saying, well, now tell me the difference between Peter Drucker, he's a senior man, Peter Drucker, world famous. Tell me the difference between a for-profit company and a non-profit company. Exactly. People were shuddered, they didn't know what to say. The only difference is the for-profit pays taxes, the non-profit doesn't. Right? So as a business owner, whether you're small, mid-size, or large, whether you're non-profit or for-profit, now you have to be a for-profit to get an SBA loan. Non-profits can't qualify for SBA. But if you're a for-profit business, there are definitely solutions out there that can do those two things. Help you increase your income, reduce expenses, and pay taxes, unfortunately, because SBA is right down from the IRS. So we're going to go into how those kind of come together here. But this is going to just be about 45, 50 minutes worth of information. We'll have 15 minutes for questions and answers. Now, did everybody get one of the handouts here, one of the worksheets? So you can see the introduction here. This tells about our partnership between Fund My Business and MBank. You can read through that, take a look at that. We're going to be discussing some of these new programs. This is a summary chart on page 2 here. This is actually a 2-page document, so if you want the whole document, I can send that to you on email, so you can fill in your worksheet if you want the entire document. There's some other different programs on there. So you can take a look at that. But if you take a look at the 3rd page here, you can use this 3rd page as a notepad for yourself. And what you're going to be able to do is we're here tomorrow. We're also here on Saturday to meet with business owners. Every business owner is entitled to a free SB funding consultation. We'll sit down, take a look at your different situations, take a look at what your goals are, and to see how an SBA loan can help you achieve those goals. So like I said, you can use this as a notepad here as we go through the information. And at the end, Mr. Adam Gower, he's one of the vice presidents with our company. He's here. You can meet with Adam, and he'll get that scheduled for you. We have it scheduled for tomorrow and also on Saturday if you're available for either one of those. Like I said, what we're going to just go through is some of the new programs, as I mentioned, through January 2014. We'll talk about problems for applicants, and Zane touched base on it. How do I get funding? I mean, there's so much paperwork. This is just one of the documents the bank has to deal with. So as of January 1st, they've streamlined it. Now it's, just this one document is 13 pages. But this is an eligibility document. So the bank has to comply with these guidelines, and I'm going to talk about it shortly, to get the guarantee from the government. But during the funding consultation, what we're going to do is we're going to see if you look like this document. We have a little 3-page funding consultation form that summarizes this. So that's going to save you a lot of time and effort of how do you weed through 400 pages of underwriting manual. And sometimes you go to the banks and they say, here, fill in this application, and 4 weeks later they say, oh, you're declined. Well, they could have just uncovered some of these issues right up front, and that's what we'll do during this funding consultation, because you have to look like this manual. It's a federal program, so it's the same in all 50 states. MBank is committed to this. Tom is here. He's the underwriter for these SBA loans. He's very familiar with this document, with these eligibility requirements, and we're going to do our best to help you. We'll talk about some financing examples. I have examples here of how do you capitalize your business? How do you buy your own building? There's an issue here with rent versus owning. We're going to go into some issues there. There's many benefits of owning your own building instead of making the landlord rich. So we'll talk about that a little bit. Talk about some of the basic underwriting eligibility issues. And like I said, afterwards you can schedule your funding consultation with Adam there. You can look at all the information about the SBA online. Has anybody ever gone to their new website? Okay. Great information on there. SBA.gov is the website. And you can see it's been around since 1954. So it's been used during good times, during bad times. Like I mentioned, from 2000 and 2007, most businesses, bankers weren't using it. I mean, they were trying to outlaw FHA loans. Remember, get rid of the FHA. It's antiquated. Good thing they didn't, because nobody would buy a house nowadays. So FHA is for residential. It's an insured loan, like SBA is for commercial. And pretty much for the next 5 to 7 years, until all this easy financing comes back around, SBA is really going to be the go-to program for funding businesses in the United States, right here in Portland. So if you're not involved with the program right now or looking to get involved with it, it is really key to a program to take a look at, because like I said, maybe until 2020, and some of you have been around for a period of time, well, this is all cycles. Sometimes it's easy commercial financing, then it's government-backed financing, so it's all cycles. Right now, SBA is the go-to program. And just to kind of give you some numbers on this, this is all right online. The fiscal year for the SBA ends on September 30th of each year. So in 2009, before they started making these changes, the SBA was only doing maybe about 9 to 10 billion per year. This is nationwide, 9 to 10 billion. For the fiscal year ending September 30th, 2013, that was close to 27 billion, almost $30 billion worth of SBA loans. Now, so SBA's lending is going like this. Regular commercial financing is going like this. So you want to get on a trend with this thing. So it is working. The government's done a great job to help it get, to get this information out, change the program so they're usable. But most importantly, banks like MBank, they want to lend, and that's really where you got to get to, because the bank lends the money on these. The SBA guarantees the loan, and you can see that's what it does. So if you get a regular commercial bank loan, and say you borrow, just for a round number, $500,000, for example. If you borrow $500,000 from the bank, it's 0% guaranteed against loss. You better be, double diamond platinum, because the bank doesn't want to lose money on these things. But what the SBA does is, through the SBA loan, the bank can still lend the $500,000, and the government guarantees 75% of the loan against loss. So that means the bank lends $500,000, they get a guarantee of $375,000 against loss from the government. So that's a much easier way for them to say yes instead of no, 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 no down the line. So that's what the SBA does. Is even if it's called an SBA loan, they don't lend the money. The government has no money to lend out. The bank lends the money. SBA guarantees the loan for you, making it easier for the bank to say yes on these things. And you can see here old myths versus new process. Again, a lot of old myths out there. Takes a long time, a lot of paperwork. Well, when you partner with us, with Fund My Business and MBank, we handle all that for you. We do the paperwork the right way so it meets these guidelines, get it to the underwriter so they can do their proper job on this, and that speeds up the whole process when you don't need to have to sit down and figure out, how do I fill in my 33 pages of loan applications to meet this guideline? Well, one easy way is you could just read page, what's that, 88 to about 263, and this gives you the guidelines. This is the credit guidelines. This is the collateral guide. This is the cash flow. This is every detail in here to fill in your application properly. Has anybody ever seen this? Okay, you can find this online, but what good is it? Because, like I said, you got to do the paperwork. You got to find the right lender, like MBank. And then you got to get the thing all squared away. If you're running your business 12 or 14 hours a day, or 10 hours or 9 hours, by the way, I feel pretty fortunate because in my position, I only have to work a half a day, 9 to 9. The manager told me that a couple of months ago. Good news, boy. You're going to keep your pay the same, and you only have to work a half a day. I was so happy. And then I saw the rest of the email, So you can concentrate on your business. We handle this stuff on our end, where we help you with the paperwork, get it to the underwriter in the proper fashion. So if you want to take a look at that little cheat sheet there I put in there, that loan summary chart. Like I said, there's some basic programs in here that are available out here. So there's a 7A program, and this is most of the loans done through the SBA program are structured under the 7A program because you can use it for buying a building, equipment purchases, start up a business, buy a business, franchises. The list goes on and on. Any normal operating business expense can be financed with the 7A loan. And if you look on your little cheat sheet chart there, it says use of proceeds, and it just listed right there. Land purchase, improvements, leasehold improvements, refinance debt. I'll talk about a little bit about that refinance debt. That's a big problem, and this is going to be a great solution. So that's available anywhere from $50,000 minimum up to $5 million. And as I mentioned, these are guaranteed loans. So if you are after a large purchase, for example, and you're looking for a $5 million loan, MBank can take a look at that for you. But what the government does is the bank lends the $5 million, and the government guarantees $3,750,000 against loss to the bank. That's a big guarantee on that loan. Now, there's a special program that's not on your summary chart, but I'll mention it. It's called the International Trade Program. Los Angeles, there's a lot of exporters out there. In this, in the neck of the woods, there's a lot of people doing exporting, but they offer a 90% guarantee on these Export Express programs to really help businesses increase their sales by exporting. Exporting could be to Canada, right? It's just outside of the country. To Mexico, South America, China. Why is Coca-Cola in China? Because if you get 30 billion people hooked on your product, right? What more do you have to do? Well, they keep on going, though, right? So that's something that has come around here, and MBank is looking at that. There's lines of credit available, $350,000 up to $5 million. Construction financing. So you see this $5 million is pretty much the maximum, and that was changed a couple years ago. It used to be $2 million, and now it's $5 million. So they're looking to, the SBA is really proactive with this thing. They're making it a relevant program. They're trying to keep up with it. Changes come every 6 months or so. We'll keep you updated about what's happening with this thing, but it becomes a relevant program to, like I said, really increase revenue, decrease expenses, and you have more money in your pocketbook at the end of the month. 504 loans, we have a certified development company representative here today, but that 504 loan, you can buy your own building up to, it says $14 million. If you did the exact math on it, you can buy a building up to $13,750,000 with just 10% down payment. And what are the rates right now on the 504 piece? 5.29%. That's with 10% down payment. There's no commercial loan out there like that. So if you are looking to stop renting and own your own facility, your own location, your own building, you can accomplish that with either the 7A loan or MBank and the CDC can work together to help you for that larger type of transaction. So again, if you want more of the details on the rest of these programs, I just brought one of these, unfortunately, but just leave your worksheet there with Adam, and we'll get these emailed out to you. Some of the benefits of the program here, you can see the number one benefit is really access to capital. And that's kind of really where MBank comes in here. MBank has a goal here and a commitment to this community. Like I said, to help one business owner at a time to achieve their goals. So MBank is going to be providing capital here to the community, and that's really what the SBA is all about too. Because if there's not capital available, it's tough to expand. The only way to expand is to take money out of your pocket, and either with cash, right, or I don't even have a credit card. My wife does, I have one of those license plates that says, driver carries no cash, he's married. So I can have a $20 and a $1 bill, right? So, but that's the problem with businesses, the same, right? If you have a business, you're either taking money out of your pocket to expand, or you're borrowing money to expand, right? Now, if you're trying to borrow money on credit cards, does anybody know what the cash advance rate on a credit card is? 18%? Have you read the fine print? Sometimes 28%, 30%. If your profit margin is 15%, and you're taking money off of credit cards, and some books will say that, yeah, just put it on a credit card. You never paid off if you paid a minimum payment, by the way. It doesn't take long to get out of business quickly. Or how about the merchant cash advance, cash call? That's in California. You make a cash call, you'll get $5,000 or $10,000. That can put you out of business because the cost of capital is excessive. The cost of capital for an SBA loan is regulated by the government. And if you want to make a notation of this is the interest rate. It's the prime rate. Right now that's 3.25% in the United States, plus 2.75. Just add them up, it's 6%. On real estate purchases, about 5.25%. You're not going to go out. Nobody's ever gone out of business because they had an SBA loan. They've gone out of business because they had excess of capital loans, but not an SBA loan. Again, I'll talk more about guidelines here just shortly, but it's a little easier. So they've given definite guidelines on cash flow requirements. They've given it, guidelines on credit, guidelines on collateral. So we have those guidelines. We know what they look like. When we meet with our funding consultation, we're going to go through those so you can match up and see if you qualify. If you can't qualify right now, at least we can give you the advice of, say, here's what you need to look like. Work on this, and work on this, like a consulting company. And then you can come back in 30 or 45 days or 60 days and then start the application process. Lower payments on these. Some of the loans, like the lines of credit, offer interest-only payments, but these are going to be principal and interest loans. The SBA doesn't want you to have an interest-only loan, because if the bank offers an interest-only loan, if you keep on paying interest only, when do you get out of debt? It's a toughie, right? When does an attorney want the case to end? Never, right? So the SBA makes this affordable, it's reasonable, and they keep all the fees in check too, and I'll talk about some of the fees that are associated with these. 100% financing for established businesses. So that means if you want to buy equipment, if you want to expand your business, you want to do leasehold improvements, that can be 100% financed if it's an established business, more than 2 or 3 years old. If you're trying to start up something or buy a business or buy a building, for example, you can see down payments are as low as 10%. If you're trying to get something started up, that's possible with the SBA. It's a little more difficult, but you could, but you'll need 30 to 40% of the total project cost in cash. And if you take a look at what I'm talking about here on that little cheat sheet here, on that worksheet, on page 3 there it says the financing. So you could fill this in as we're talking, but you can see all these different costs, all these different business expenses can be financed with one 7A loan nowadays. So, for example, you could get a real estate purchase, new equipment, and improvements all simultaneously with one loan, as opposed to going the commercial route where you have to get a real estate mortgage and then maybe an equipment loan and then some money for long-term working capital. All that could be structured into one loan nowadays. So you can follow along with that. And these can be assumable. So if you are in an existing business, if you want to restructure your balance sheet, means that if you have a whole bunch of debt on your balance sheet right now, or if you're not using a balance sheet, you have credit card debt, you have business loans, you have term loans, all that type of debt most of it can be refinanced with an SBA loan. So a lot of times you'll be able to reduce your expenses, right? Clean up your balance sheet, which means you'll have more productive debt on there. But also, if you're looking to sell your business in, say, 3 to 5 years, that SBA loan could be assumable, so it makes it a little easier for that exit strategy. So some people want to keep it for their kids and retire with the thing. Other people maybe want to sell a business in 3 to 5 years. So that assumability feature does make it a little easier to sell the business later on. Just a little bit about our partnership. We've been doing this since 2007 in the SBA financing world. Like I said, Zane mentioned I used to run La Jolla Bank's SBA division in the state of Nevada and down in San Bernardino County for a bunch of years. And then what happened was One West Bank bought out La Jolla. It wasn't because of SBA loan portfolio. They had a whole bunch of commercial construction loans down in San Diego. And that 2006, it was decimated. Many areas of the country. Instead of going with another bank, I decided to get in this SBA loan packaging business. And that's what we are. We're an SBA loan packager regulated by the Small Business Administration. But what that does is instead of me working at one bank and saying, well, great, thanks for the application, but you're declined. You're declined. It happens quite often. We're able to partner up with preferred lending providers. It's a special designation these banks get from the SBA. Altogether, there's about 2,700 SBA lenders in the country, about 200 or 300 really active banks out there. And these PLP lenders can lend in all 50 states. So if we're working with a construction company, there's banks that will lend to construction companies. There's banks that will lend to hotel industry. There's banks that will lend to retail, for example. So the kind of problems we solve is getting all the paperwork right and then finding the right lender. You're fortunate because this is great timing for you right here in Portland. M-Bank is the right lender, and you can see that they've been located up here a number. How long, Zane? 20?
17 years.
How many years?
17.
17 years, almost 20 years now. They're definitely entrenched in the community here. Their SB lending branch is over there on Southeast Stark, right at the 205. You've probably seen it, M-Bank, green. And they have 4 other branches there. But the idea of this is to really, expand this SBA footprint and really become the SBA, number one SBA lender here in the region. If you look at the SBA numbers, and this is all right online, it's really a mixed match. There's nobody really taking a stand and saying, hey, there's government guaranteed financing. We're going to help this community. We're going to put it on its feet. And we're going to help businesses increase their income, reduce expenses. And when you do that, money flows around. If money's tight, it's tough. Does everybody understand that? You have to get this volume of money flowing. It helps everybody. So that's really what M-Bank is all about with this SBA program, is helping business owners. You can look at the different websites there. We have fundmybusiness.biz/MBank. That's our partner web page. If you know of associates or somebody would like to hear this information, that's right on a log-on screen where you can request a funding consultation. And we can do the funding consultation at the branch or right online. And people like that nowadays because they don't have to leave their business. They don't have to drive to a workshop. Thank you for driving all the way down here. But we can do a funding consultation right online and meet via webcam, and you'll be able to see our computer screens as we go through these documents. You can also see mbankonline.com. Like I said, that's the bottom line. Why are we doing these webinars? Why are we doing seminars like this on a monthly basis? Really to help businesses expand and grow here in the community. Like I said, this is a very flexible program nowadays with SBA. But this is a big issue right there. Is just simply expand general business expansion. How do you build a business? How do you get new customers? How do you reduce your expenses? All these can be accomplished with an SBA loan. Maybe you know somebody that wants to get into a business. They want to buy a franchise. Now, if you want to make a notation here, there's something called the Franchise Performance Report. This comes out every year by the SBA, and this lists all the franchises funded by an SBA loan over the last 9 or 10 year period. But just to kind of give you an example, Subway has about 2,000 SBA loans outstanding. There's more than 2,000 Subway locations, but about 2,000 funded with an SBA loan. They have a failure rate of about 8%. But if you look at Quiznos, if you were to say, well, I want to get into business, what should I start up? This is a great source to take a look at because Quiznos has about the same number of SBA loans outstanding, about 2,000, but their failure rate is close to 38%. So you couldn't flip a coin and say, well, what do you like to do, Jeff? Well, I like to eat sandwiches. Okay, I'll open up a sandwich shop, right? Quiznos, Subway, who cares? It's a hoagie, it's a bun. But if you have this franchise performance report in front of you at least, you can say, well, maybe the Quiznos may not be a good choice because it has a high failure rate. There's many, there's about hundreds on there. But if you want to copy that, or if you know somebody who needs a copy of that, they're looking to get into business, that's a good starting point. Another good starting point is the industry performance report. And these are used by SBA underwriters to make a decision, should we lend to your business or not lend to your business? So you could use this for business acquisitions, like I said, business expansion. Tenant improvements, if you're in a lease space, you don't need to own your building or buy a building to get an SBA loan. You could just be simply leasing a spot. So if you are leasing a space, maybe you want to do tenant improvements in there, that can be covered, new equipment. Again, the list goes on and on. So if you want to make a notation here, kind of what you need financing for, and we can schedule that funding consultation for you, you can just list that in there and give that to Mr. Gower. What else? Real estate purchase, that's exciting. 10% down payment. On $1 million, the payment is roughly about $6,000 a month. On a $500,000 loan, the payment's roughly about $3,000 a month. How many businesses are paying close to $3,000 per month? We're working with several clients right now. One is coming to the branch on Saturday. They're paying $3,500 a month for a lease space. They're looking to buy a building for close to $600,000, and it's almost just the same as what they're paying on their existing spot. Plus, they have triple net lease, which means they have to pay the taxes and insurance as well anyway. So if you're there for 7 years, who's really getting the benefit of you being in that location? The building owner. So it's imperative to think about, if you're thinking about long-term business and you're going to be around for a period of time. Leah, how long have you been with Fidelity? 16 years. Fortunately, you didn't have to pay rent here, right?
Yes.
They paid you. But think of it, if you had 16 years worth of payments into it, and you just paid a little extra, because this is a 25-year term on the real estate, if you paid a little extra, in 16 years you'd own your own, for the most part, you'd own the location, right?
That would be fabulous.
Exactly. So sometimes you make more from the sale of the real estate. Southern California was a hotbed of it. Florida, Nevada, when that real estate market was in full play, people were making more money from selling the building and the restaurant than operating the restaurant. Right? Any restaurant owners? Okay, how long is the profit? The P&L expense sheet for restaurants? I mean, it's endless. And congratulations that you're in the restaurant, but it's a tough business. Because the knife sharpener, the grease trap guy. I mean, it goes on and on and on. It seems. So sometimes it's beneficial if you're in a position to buy a location. You can do that with the SBA 7A loan nowadays. Some current changes here. Size standard's been increased. There's something called the alternative size standard. So this is why you've really seen an increase in volume over the last several years, because a small business is now defined as having less than $5 million a year in net profit and less than $15 million in net assets. Is everybody under that kind of number? Okay, good. So you meet the first qualifying guideline. And we joke, well, hopefully you can't qualify for the SBA loan in the next 4 or 5 years, right, with the size standard. But you can see it's not just for small businesses anymore. It's really for small to mid-sized businesses. It's it's not really discriminatory, but they were saying it's for small, tiny businesses. They're trying to expand this approach to help more businesses out there. So that's one of the things the government's changed. I mentioned this international trade program. This is helping businesses expand with exporting. If you're having a tough time finding customers in the United States, well, there's a lot of customers in other countries that you can take advantage of with this Export Express. And this is one of the programs that the government has tried to manipulate in Washington, D.C. to say, well, there's a trade imbalance, right? There's more imports than exports. And so this is one thing for small and mid-sized businesses to help increase export in the United States, is helping it to expand into that arena. Most business debt can be refinanced. If you have business debt, now think about this, if you have interest-only loans, if you're paying interest only to a bank, you can refinance with an SBA loan right now. The SBA considers that to be called unreasonable debt. For the reason we talked about earlier, if you keep on paying interest only, you never get out of debt. So you can refinance interest only loans, balloon notes, any commercial loan with a term loan, interest rates greater than 6%. We have all the details in this new form here. And if you do have debt, we'll go through this eligibility checklist to make sure your debt is eligible to refinance. But we've seen a substantial reduction in expenses. So that's just one line item that you can affect with an SBA loan, right, is the interest expense line item. And there's many line items on there, but if you can get a handle on interest expense, and supposing you can refinance your debt, we're working with a client right now in Phoenix. They're paying $3,500. I think I have the example up here. But they've saved $2,000 a month on their interest expense. That's $24,000 per year. They didn't fire one employee. They didn't sell one more product. But that money goes right into their pocket because there's no cost of goods sold associated with an interest expense, right? So this is one way that you can use this program to manipulate your business, and big businesses do it all the time. How do we reduce interest expense? Now this is available for small and mid-sized businesses. This is a nice new program. This started on January 1st. So all loans under $350,000, $50,000 is good at MBank. $100,000, the larger loan sizes. That can be financed under the Small Loan Advantage program. A little easier on collateral, just a little easier for qualifying guidelines to help more small business to get these smaller loan sizes. So that's available. Self-storage. Most of these loans are going to be for owner-occupied These are going to be businesses that are being operated, not for investments. But if you are looking to make an investment, you can buy into self-storage facilities with just 10% down payment under the SBA. They changed that a couple years ago. Is anybody familiar with how self-storage works? It's much better than an apartment complex because you got to try to evict people. There's painting, the carpet, there's a meth lab. I mean, crazy stuff you see in banking. Seriously, with the self-storage, they come in, little broom, maybe mop it out with some water, and it's for rent that afternoon. So if you are looking for an investment, that is something to take a look at, is self-storage. And again, it's a federal program, so it could be anywhere. People are making good money with these self-storage, especially if you're thinking about retirement. A few other changes. There's a whole bunch of changes. I'm not going to go through all these, but debt service coverage ratio, so it must be above 1.15 or greater. I'm not going to go into the meaning of that, but what we need to do is an analysis of your last year's tax return and profit and loss statement for 2013 if you don't have your taxes prepared. So if you want to set up a funding consultation for either tomorrow or on Saturday, like I said, we'll need that last year's tax return. Pretty much the front page, because that'll give us, if there's add backs on there, the information we need, and the profit and loss and balance sheet. From that, we can do a pretty good, thorough, at least a good upfront cash flow analysis, see how much money you can qualify for. Because there's credit guidelines, there's collateral guidelines, but the overriding factor that affects how much you can get from these under these SBA programs is what is your cash flow. And there's an adjusted cash flow. So there's some add backs that we can add back some different line items. But at least they give a number. Before, the SBA was really gray about this. They didn't have a number. It was really up to the bank. They didn't know if it was going to meet the guarantee requirement. But at least there's a number in there right now. This is interesting. If you know anybody or maybe yourself, and you bought a business with a seller carryback financing note. You bought a business and the seller carryback note, and you're still paying the seller on these notes. Well, you can use an SBA loan to pay off that seller carryback note. Number one, sometimes the terms are greater than the 6% interest rate. They're interest only. There's demand and balloon clauses on there. And a lot of times, you as a business owner, you're running your business. You don't need still the old seller involved with this. If you have 24 months worth of payments into the seller carryback note, you can refinance with an SBA loan. Again, it becomes more long-term type of financing. The old partner is gone. So that is something out there that's really changed, where we can refinance this. Sometimes it does lower the payment on the existing seller carry note, and there's some benefits there for the old seller as well. Now you can see here they've also put kind of more defined collateral requirements. So if you're looking for a loan under $25,000, and that's going to be more like a micro loan. But the bank, we're not really in that realm there. There's no collateral required for these micro loans. But for loans between $25,000 up to $350,000, all they're looking at is really just a lien on fixed assets, and it really depends on the other issues. And then from $350,000 to $5 million, it's collateral is required. Possible real estate may be needed. A UCC1 filing at the lien on the business assets. But these, there is collateral issues. So they're looking at cash flow. They're looking at collateral. They're looking at credit. And again, we're going to discuss these right up front, so you don't waste your time on a hunt when you don't even meet the basic SBA guidelines. So like I said, we're going to be looking at these issues up front for you before proceeding. If you're looking for a loan under $150,000 right now, you can see that they gave you a little treat here until September 30th of this year. So the government guarantee fee is waived on 7A loans less than $150,000. So that's another way for the SBA to promote the program and get the word out there and help more businesses out there. Any veterans in the room? Okay, thank you for your service, Tom. You can get a Veterans Advantage loan. This started on January 1st up to $350,000, and the same thing with that. If you're a veteran, if you know any veterans, let them know about this program. Because they can buy their own business, they could expand their existing business, and the government guarantee fee is waived. SBA is waiving that as well to help more of the veterans out there. And we're all for veterans. My grandfather survived the Iwo Jima. He was a Marine. I mean, how do you get out of Iwo Jima? 50 million bullets flying. So, thank you for your service, Tom. Let's talk about some of the terms and fees on these. As I mentioned, you don't need to be buying real estate. If you have just a lease-based business, it could be between 7 and 10 years on a term. And that term will depend on the lease, and we'll take a look at your lease terms and discuss those, those lease terms. They look at the hard lease plus options to extend. Something with the real estate, as I mentioned, 25 years on the real estate. And that really can drive that payment down. As you know, the longer the term, the lower the payment. And with these loans, whether it's a lease-based, there's no balloon calls. There's no escalation clause features. Commercial loans will have all these different features where it's access to capital, but it's really not consistent access to capital. And that's what the SBA is all about. They find that it's better for you to be concentrating on your business as opposed to worrying about the loan being called in every 12 months or 24 months, or some of these commercial notes we've seen have just a demand feature. Well, we liked you last year, but it's March and we don't like you anymore. You have to pay all the money off. Here's a number for you, and Portland will be affected by this. They say this year there's about $700 billion worth of commercial debt that's coming due across the United States that won't be renewed under commercial terms. So if you do have commercial debt, we can discuss it during the funding consultation. We can refinance and do an SBA package where you could have those benefits that the SBA finds is beneficial for small businesses, not to have those demand or call features. If you are buying real estate, if the loan's over 15 years in a term, there's just a 3-year prepayment penalty. Here's some government speak for you. They don't call it a prepayment penalty. The government calls it a subsidy recoupment. Well, what's this? You said there's no prepayment penalty. Well, that's a subsidy recoupment, right? So this is kind of a moot point, because to buy a piece of real estate, you have to occupy at least 51% of the space with your business. So if you're buying a little restaurant pad, for example, you're going to occupy the 100% of the space of that business. But if you wanted to buy a little bit larger building, you could occupy 51 or 60% of it, lease out the other space to some other type of complementary business. That would help reduce your mortgage payment. And it's like the old duplex idea. Buy a duplex, live at one side and rent out the other. You can live there almost for free and have it paid off in 25 or 30 years. Now, the SBA allows you to do that with SBA financing for your location. So that's something out there where, if you're trying to find one specific building for your business, with this you can buy a little bit larger space. Like I said, it increases your odds of buying something, and then you can lease out that space. And we can give you some more details on that idea. All the fees are regulated. The SBA guarantee fee, all these fees can be added to the loan, or 2 to 3% roughly. Packaging and consulting fees up to 2% banks can charge. Other third-party fees, like I said, all these fees are regulated by the SBA. But the SBA doesn't permit certain fees, like origination fees or discount fees. Things like banks will charge on commercial loans. Those are not permitted by the SBA on these SBA loans. Again, to help you reduce expenses on these. We do solve several problems for our clients when you work with our partnership here in MBank. Like I said, really is, the crux of this issue is, how can I get money for my business? Well, if you're trying to get an SBA loan, you got to sort through this, and that's why the MBank, we like partnering with MBank, because they're going to be the lender on this. We'll do all the legwork for you, so you can meet these guidelines. MBank can fund an eligible type of business. So you don't have to figure out all these different guidelines. But during that funding consultation, like I said, we're going to make sure you meet these basic summary guidelines before we start a whole application process with you. Meeting takes about an hour and a half maybe if you have a whole bunch of questions. Like I said, we'll be looking at your credit, capital, collateral, cash flow issues. And obviously what you're looking for is a probability of success. The last thing you want to do is borrow $50,000 or $950,000 and you can't pay it back in 9 months. The bank doesn't want that to happen. The SBA certainly doesn't want that, and like I said, you don't want it to happen. So it's a common sense underwriting. It's not a credit score number on a computer. Tom's a real person, and he smiles too for a bank underwriting. So real people underwrite this. So it's a common sense approach to underwriting, not just a computerized model and you can see what happened with the mortgage market. They went to that. Does anybody know that anybody went into foreclosure because they bought a house with zero down and a 720 credit score, and they're making $15 an hour? They're all loser loans. I mean, it's not loser loans, but I mean, they're all going to go bad for the most part. And that's what happened with Countrywide. That's what's happened with many of these banks. Government's changed all that. This is cash flow based. MBank is serious about these matters. So like I said, nobody wants that happening. So it's going to be a good probability of success that this will work out for you. The second problem that we solve is, like I said, MBank is lending on these loans. Sometimes the package won't meet the internal bank underwriting guidelines. But fortunately, with our partnership, and it's transparent, we can work with other preferred lending providers to find a solution to your financing needs. So you're not just, well, what if MBank doesn't fund me? What if, You don't have to worry about that because we have other banking partners with this association that can bring money into Portland where maybe MBank can't. So that also is another option by using our partnership with this. And like I said, 504, that's going to be mainly used for the real estate or fixed assets. 95% of these 504 loans is for the real estate purchase. Is that pretty much the numbers? Everything else is under the 7A loan. So if you wanted working capital, if you wanted equipment, if you wanted to even buy the building, that can handle the 7A. Like I said, the 504 is going to be for these larger transactions. Pretty much, what do you think, 500,000 where it really starts making sense, 750 purchase price?
Yeah, I mean, basically anything over 250, under 250, it really doesn't make sense.
Exactly. So if you're looking to buy the building, that could be another option. And again, there's a 7A loan for the real estate. There's a 504 loan for the real estate. Each one has its own benefits and disadvantages, and we can kind of take a look at that and show you both approaches, obviously. But the really easy explanation of this is with a 504 loan, it's a two-loan structure. So with a 504 loan, you'll have two payments and two loans. Same 10% down payment. 7A loan, it'll just be one loan, one payment. So if you wanted to kind of look at it that way, it's a pretty easy way to understand it. Just a couple examples, and we'll open up for questions and answers. But here's one. Capitalize your business. This is a client we did down in San Diego. They needed working capital, equipment, $75,000, and tenant improvements. It's a little chiropractic office, and they were taking over the lease space next door in their little medical office space. So they're knocking down a wall. Total loan request on that $312,500, and you can see here's the 7A loan amount, $319,530. So as I mentioned, the government guarantee, the SB charges a guarantee fee. That's added into the loan. You don't need to pay that out of pocket to the government. 6% interest rate, 10-year term, and as I mentioned on these, there's no call, no prepayment penalty. And you can see the monthly payment there, $3,500. They received the cash injection to their operating account of $50,000. But now remember, they doubled the size of the space of their business. On that double the size, even though their monthly payment was $3,500, their expected revenue from that thing was about $80,000 to $90,000 per year additional revenue from the extra space just in the first year. So that was a good solution for them to expand their business using the SBA loan. Another example here. A lot more, many other businesses are coming to this because they can restructure all this debt. So if you have interest-only loans, a maturing term debt, so that could be maturing in the next 1 month, 30, 90 days, even if it's maturing in the next 1 or 2 years. If there's a balloon note on there like that, an early maturity clause, that can be refinanced. The SB considers it to be unreasonable to have this short-term debt, really. Business credit cards could even be refinanced if it was used for the business. So you can see there's $275,000 worth of current debt. If you did the average interest rate on this, it was about 11%. But the conversation at first was saying, no, I don't need to restructure debt. My interest rate is only about 6%, I think, when I looked at it. Yeah, that was the one business term note. So once we did the whole analysis on their profit and loss and the balance sheet, it worked out to be about 11% per year. And they were surprised at that because if you're running a restaurant, you're not really thinking about what the numbers are sometimes. If you're running an auto business or whatever, a doctor's office even, the cash flow kind of covers things, but if cash flow starts weakening, all of a sudden they become magnified, and then this became that problem. 5-year term, callable, so they were paying $5,200 a month. New payment on the loan there, same thing, 10-year term, just lease-based business, $3,100, monthly savings, $2,144. They didn't fire one employee. They didn't provide one extra, chiropractic service, and they put almost $26,000 a year in their pocket. Now that was a good solution for this, and that's a lot of money if you think about that. $2,000 a month extra, just by restructuring your balance sheet. Purchase your own building. A lot of people want to do it. I mean, how's the marketplace coming around here in Portland? Exactly. It's certain areas. LA's coming back a little bit. Some of the areas, but it's tough for a lot of the country. It's still kind of languishing a little bit. So there are motivated sellers out there. You can get deals here. It's not like 2005 where everybody wanted top dollar for their bill. Oh no, mine's 24 karat gold. I mean, don't talk to me about a low ball offer, right? Now they're all wishing they took the thing. But with this, you can see here you could buy your own building. This is a loan we did up in Northern California. They were doing a warehouse office type of thing. It was near the coast there. They did trucking. So this is $1 million purchase. They put down 10%. And again, the same thing. You can see that government guarantee fee is added into the loan. 25-year term, 6% interest rate. Their current rent was $6,500, and their new principal and interest payment $5,929, and the loan's being paid down every month. So if you're not saving, say, $500 or $600 or $700 a month, if you buy your own building, now you start saving $500, $600, $700, $800 a month, because that's principal reduction. That's to the good. So when you buy your building, not only do you take care of your location needs, but you can also take care of your retirement, something for the wife and the kids or your spouse or your husband, right? So we did that with the 7A loan, but like I said, the 504 loan will be available on that with fixed rates. And that 5.29, that's 20-year term. Yeah, 5.29%, 20-year term, locked in for 20 years. Doesn't change. That's a big benefit. So that's something we can take a look at for you through MBank. And just one final idea here, purchase your business or franchise. There's a lot of people out there with something called lazy money. That's another workshop and seminar we do online. If you're interested in hearing more about this, it's called lazy money. Does anybody know what lazy money is? It's like a brother-in-law you can't get out of your house, right? Why can't you just get a job, for God's sakes? Okay, but lazy money is, does anybody know what the bank pays on a certificate of deposit right now? Exactly. It is nothing, because by the time you get to 1098, pay the accountant, the inflation, it's zero, right? So, but they advertise it. Wow, we're paying 0.7% Come down, boy, it's a big rush. We can't handle it. So if you have $100,000 in the bank and you get, we'll say you get 1% per year, how much do you get at the end of the year? $100, right? Because 10% would be $1,000. 1% is $100. So you put the money in the bank and you get $100,000 and you get $100, right? Is it 1,000? Okay, so it's 1,000 on 100,000. That's why I need to have a calculator and a PowerPoint presentation. So what you can do is if you have money in a 401k plan, for example, or an IRA rollover plan, there's a way you can take that money out tax-free. We'll call it tax-deferred, and pay no early withdrawal penalty on this, because it's a retirement plan transfer to a retirement plan transfer. No taxes, no early withdrawal penalty. And you can use that money in conjunction with an SBA loan funded by MBank to buy a business. And I'm talking about a good quality business. I'm not, something that's already existing with 3 years worth of tax returns, good cash flow. Maybe they want to sell the business because they're getting divorced. There's a lot of reasons why people sell businesses out there. But that's a way to take lazy money in an IRA or a 401k plan, for example, roll it over into a new retirement plan, partnership with MBank on an SBA loan. And here's an example where they bought, and this is down in Coronado Island in San Diego. And there's a lot of ex-military down there. That's where all the naval bases were. It's like generals, lieutenants, captains. They're all down there, right? So this is $475. The franchise fee on this particular business was $35,000. The franchise fee can be financed into the SBA loan. Franchisers won't typically tell you that, because they just, if they're trying to sell you the franchise, what do they want from you, Zane? $35,000. Just write it today, and then you can start spending money. So this will save you money too. Tenant improvements for the new location, for the existing location, to build that up, $63,000. Total project cost $573. But you can see the 70% SBA loan, $401. The SBA permits seller carryback financing nowadays. There's some rules in there. We can look through those rules. But that's permitted to help you bring in less cash injection. So instead of bringing 30% down, this buyer just had to bring in 10% down, $57,300. 7A monthly payment was $4,400. Now there's a calculation we have to do. So we needed to show that the seller's tax returns was producing at least $75,000 worth of income. This particular business was bringing close to $150,000, $160,000 adjusted income. Was that a good purchase for them? Exactly. So there's opportunities out there where with an SBA loan, if you have lazy money, like I said, that 401k or IRA plan, you can combine that to buy existing businesses out there. Eligibility, there's only 2 more slides here. So like I said, if you take a look at that little worksheet, there's a few issues of basic eligibility on these SBA loans. So number 1 here, it says, has the business been in operation for more than 2 years? If it's under 2 years, it's considered to be a startup business. So that'll be one thing to take a look at. Is the business a for-profit corporation, a for-profit business? So it could be a S corporation, a sole proprietorship, LLC. That entity doesn't make too much of a difference. It just has to be a legal entity if you have one. The applicant has not caused any loss to the government. SBA's in Washington, D.C. Well, what else is up there? FBI, IRS, CIA. It's all. I think they're all in the same hallway. So yeah, they've changed some of the things on there. But if there was a conviction, for example, a felony, you have to put it down. We have to get the paperwork in there, and you have to send it up to the SBA Inspector General office for review. But I think there's a new process where you can just send it to the regional processing center, and they can sign off on it. If it's a misdemeanor, things like that, now the bank actually has power to clear that a little bit. But if it's on there, like I said, it's the great computer system in Washington, D.C., and probably Fairfax, Virginia, where they have it all, right? It's in there, so you have to disclose all that. Applicant is not involved in any pending lawsuits, and then the applicant is a U.S. citizen or a legal resident. Most of the time, that's not an issue. So that it's not too crazy, and then, like I said, the rest of it is just completing that worksheet to give that Mr. Adam Gower. That's it for the today's presentation in this morning session for this SBA funding consultation. If you have any questions, I can take them right now. If not, we can just relax and have a cup of tea and do our thing, right?